Guys, the banks are crashing and burning like an Australian bushfire, and something tells me they don't have the qualifications. Soon they'll start charging negative interest rates, and if you keep your money in the bank, you'll start losing all your hard-earned money. Slowly but surely, but not the dirty one. Today I want to give you 3 amazing stocks that pay at least 8% dividends quarterly, which is a tremendous amount by anyone's standard when it comes to the stock market. Which is great because you can't buy horseshoe bats there. Too soon, said the new spoon, lose clues. Anyways, first I want to talk about sound money. And by sound money, I mean Bitcoin. For people who don't understand Bitcoin's value, let me explain it to you in 30 seconds. It's a store of value, like gold, except nobody controls it. The banks can't tell you what you can and cannot buy. Anyone who's tried to make any kinds of investments knows what I'm talking about. I have personal experiences having to go physically into a bank and sign off on an investment only to have them refuse the transaction the next day when they told me on the phone to go into the bank and sign the form. They advised me that they cannot do binary transactions. For those that don't know, binary is anything that goes up or down, but they don't mind me buying their stocks of their company in their platform on their exchange. A little bit strange. The Fed, or Federal Reserve, is printing money, fake money, like crazy, devaluing the dollar every second. $1 billion per second they're printing. The dollar is no longer backed by gold. Thanks to President Lincoln. Great president, great hat. Dollar is no longer backed by gold. Bitcoin, however, has a limited supply of 21 million. And just so you don't have to rewind, I said 21 million. That amount cannot be changed. It's not possible in the algorithm. This May, depending what year you're watching, Bitcoin's supply will cut in half. While the dollars are being printed in the trillions, gold is not safe. Stocks are not safe. Real estate is in real trouble, and there is no estate involved. I mean pun. There are crypto cards coming out where you can earn 2.5% cash back on your purchases and an additional 18% interest on your stagnant money. Which makes me wonder, how will the banks compete? I've put a detailed list of the cards with the pros and the cons in the description below, with my affiliate links. If you use them, it would really help the channel a lot, and you'll get $50 and I'll get $50. Okay. Let's forget about all the craziness with the virus, the Fed, and the banks. Now I'm going to give you 3 already undervalued stocks from rock-solid companies that pay a minimum of 8% dividend per quarter. Basically, unheard of stuff. These are called BDCs. BDCs are a very unique kind of investment, a business development company, or BDC for short. BDCs invest in late-stage startups, ones that are cash flow positive. Those startups kick a portion of the profits to the BDC, and the BDC pays those profits out to the investments in a monthly or quarterly dividends. I love this because you make one investment in a BDC and they give you a piece of their entire deal flow and a PS of all the profits from all the startups in their portfolio. But it gets even better. BDCs trade like stocks. You can flip your shares whenever you feel like it and possibly cash out with a big payday. Mayday, mayday, give me my gravy. I'm talking about a potential 1000% windfall or more, but it's not financial advice, so you better think twice. Not financial advice, but I have personally paid tens of thousands of dollars for this information, but I'm giving it to you for free because you're good looking and smell fantastic. With that in mind, here we go. The markets are showing a lot of volatility right now as a result of the economic impacts of the virus. That makes right now a tricky time to start buying shares of a BDC. After all, many business development companies may face hard times for the next several months as they work their way back up from the current market dip. But keep in mind that this will not last forever. Eventually, the volatility will subside, businesses will reopen, and the markets will recover. Plus, BDCs aren't meant to be bought and sold right away. Don't give it away, give it away, give it away now. The real draw is in the dividend payouts. So they yield the greatest returns when you hold onto them over time. Even better if you reinvest your payouts over the next few years. Right about now, the funk's so rubber, and it's also a good time to buy shares of companies with strong business models that can survive a potential recession, as many of them are trading near historic lows. This is certainly the case for Ares Capital Corporation, or New York Stock Exchange ARCC or ARC. Ares Capital Corp is externally managed by a subsidiary of Ares Management Corporation, or New York Stock Exchange ARES or ARES. Ares Management Corporation is a publicly traded alternative asset manager with approximately 149 billion of assets under management. Ares Capital Corporation is one of the largest BDCs by both market capitalization and total assets, with 14.9 billion of assets under management since December 31, 2019, or as of. This BDC has a generous dividend, 40 cents per share dispersed quarterly. At market close on Friday, March 20, 2020, ARC closed at $10.39 per share, representing a 15.39% dividend yield. Woo! During the Great Recession, Ares Capital Corporation reduced their dividend but continued to pay investors quarterly despite their challenging market environment. Ring a bell? You can ring my bell. Ring my bell. Just for the nerds, Ares Capital Corporation investment strategy. Ares Capital Corporation ticker ARCC. Market cap 4.5 billion. Price $10.39. Dividend yield 15.39%. Annualized payout $1.60 per share. Ares Capital Corporation invests primarily in its portfolio companies by making the first 10 lien senior secure loans. It focuses on non-cyclical industries that offer high free cash flows. Furthermore, Ares seeks out opportunities to be a lead lender with voting control, giving it the ability to influence decisions of its portfolio companies. For Core Pirates investments, Ares targets 30 to 500 million in commitments in companies with a bidder ranging from 10 to 250 million. Ares looks for companies with market-leading positions in defensive industries. The large majority, 85% of Ares Capital Corporation's portfolio companies are backed by private equity firms. Ares Capital Corporation's portfolio. Ares Capital Corporation's portfolio is broadly diversified across companies and industries. At the end of 2019, Ares Capital Corporation's portfolio included 354 companies, with no single borrower accounting for more than 3%. Furthermore, Ares has a strong balance sheet with approximately 2.7 billion of liquidity available from cash and credit facilities. Additionally, Ares private equity-backed portfolio companies have access to liquidity from private equity sponsors. This liquidity will become more valuable if any of its portfolio companies have difficulty meeting debt obligations due to economic downturn. Here is a breakdown of Ares portfolio by industry. As of December 31, 2019, Ares Capital Corporation recently introduced an open letter to stakeholders to discuss its business in light of the virus global pandemic. Compound Interest Kingdom encourages you to read through this letter prior to making investments. This is not financial advice. Alright guys, I really hope you learned something there. Moving on to the next one. Here's numero 2, our second stock in the list. No soup, no chicken involved. Bank 6 unicorns with 1 investment. Welcome to the inner circle. Angel investors, venture capitalists. People tend to use these words interchangeably. I'm sure you've heard it. Problem is, saying they're the same thing is dead wrong. You're dead wrong. There are huge differences between them. Everything from how much they invest to how much money they put in, because you only get out. Angels tend to get into deals earlier, when startups are raising smaller amounts of capital. Venture capital or VC funds, on the other hand, look for companies with significant market traction, so they're usually targeting private companies in later stages. As a result, the latter often pay a premium in the millions of dollars to earn their seats at the cap table. While I firmly believe that angel investing is the best and most reliable way to make money in private equity, there is something to be said for those firms that have the power and the capital to get guys like Mark Zuckerberg and Elon Musk on the phone for a bit of parlay. For the average investor, it's nearly impossible to join forces with those big players. But today, as a special thank you for pausing the video, hitting that like and subscribe button, and turning on the notification bell, I'm going to show you how you can run with the VC big dogs for less than $7. Wait, you hit subscribe, like, and notifications, right? Pause the video, do it, and let's go, baby. Woo! Imagine access to a killer VC portfolio without the premium price tag. Traditional VC funds operate with huge amounts of capital, averaging around 207 million, which they raise from family offices, institutional investors, endowment funds, high net worth individuals, and generally rich resource pools. Then they'll take those funds and invest them into private companies, those like SpaceX, Bird Scooters, and Cargill. But in order to have these VC firms invest your money, you typically need to be deemed a high net worth individual. That means if you aren't walking around with $1 million in your bank account, which is typically the threshold needed for a VC firm to even consider you as a client, you won't be able to participate in these high profile deals. The VC world has largely blocked out all but the high and mighty from this investment class. Since AI is an emerging market, I'm going to let my AI robot Ian tell you about the next deal and how awesome compound interest kingdom is. Jarvis? Hello, AI. Anyone home? You're supposed to tell them about the second stock. What's that bird?
Which is why I want to introduce you to Sutter Rock Capital Corp. NASDAQ SSSS. Yes, you read that right. Sutter Rock Capital is a publicly traded venture investment fund. That means you could buy shares and receive them instantly, in any denomination you choose, the same way you might buy shares of Microsoft or Apple. That's why it's so important for you. By trading shares on the public market, which only go for less than $7 right now, Sutter Rock breaks down the barrier to entry that keeps most investors out of these big-name private equity deals. And their portfolio is nothing to shake a stick at either. Sutter Rock has made private equity investments in dozens of high-profile companies, including Lyft, Dropbox, Spotify, Lime, Palantir, Rover, and more. Many of these holdings eventually went public, kicking back a big return to the fund. Others are unicorns worth upwards of $2 billion today. Get in on the ground floor. Buying shares of Sutter Rock is remarkably close in experience to becoming a limited partner at a world-class VC fund, a fund with the power and operating capital to go into business with huge household names. According to Funders Club, the average VC firm manages $207 million. That capital is spread between roughly 30 to 80 startups, which means there could be around $6.9 million into each of its holdings, and that's just an average. That number can be much higher for the bigger firms, those like Excel, Andreessen Horowitz, or Benchmark, each of which touts $12.2 billion, $9.4 billion, and $1.9 billion total funds raised, respectively. So, I guess, my point is that a VC firm's pockets can be deep, which means they have access to some of the biggest name companies in the private equity world. You will be a de facto stakeholder in each and every one of the companies Sutter Rock holds in its portfolio. That means you'll be a part owner of every single one of Sutter Rock's holdings. Lyft, worth $24 billion at IPO, Palantir, worth at least $11 billion, Spotify, worth nearly $30 billion when it went public, and dozens of others. In the past 2 years, consumers logged more than 26 million rides on Lime scooters and bikes, bringing in nearly $100 million in revenue. And their revenue won't seem to slow down, either. If you live near any of the 100+ US markets hosting Lime scooters and bikes, you know why that is. They've become pretty much ubiquitous in city centers and college campuses nationwide. I've even heard that people are starting to refer to distances in Lime time. How far is that building downtown, your friend asks. Well, it's a 5-minute Lime from the metro. Now, imagine if you could earn just 1 penny each time somebody rode a Lime scooter. What would you do with $1 million in extra income each and every year? Buying stock in SSSS means that you are entitled to your fair share of Lime's profits, not to mention your share of every other company Sutter Rock holds a stake in. And, at under $7 per share, there is nothing to stop you from claiming those profits right now. Now baby, you know we had to do it. You can get the third stock by joining our Telegram group in the link below. Each month our premium members at the Compound Interest Kingdom get crypto and stock calls that boast gains of up to 100 to 500% daily. You also get a high-value monthly dividend-producing stock for all you long-term investors out there in the ether. My team is incredibly picky and prefer a minimum of 8% yield per year, which again, is shocking and unheard of anywhere else, to even famous investors. You'll also get a real estate investment recommendation every quarter. Did you know you can own real estate for less than $500? Aren't you glad you watched this video? I wish I could see your beautiful face right now. Wait, did you think that was it? I don't want to make your head explode, like some sort of value volcano. However, we will also be giving you 1 to 3 angel investment opportunities vetted by our team every month. For those who don't know, angel investing is normally excluded for the super rich. It's a chance to get in on company before it goes public and hits the stock market, the two words that separates someone who has made millions or tens of millions backing startups versus someone who's never experienced any success or deal flow. Deal flow is what separates investors who settle for Wall Street's table scraps from those who create generational wealth for themselves and their family. We're talking about the angel investors who bought into Pinterest or Zoom versus the stock investors who bought at IPO day. If you were one of the last-minute investors who bought into the stock post-IPO, you would have seen gains of 28% and 72%. Not bad, but also not generational wealth. On that same day, angel investors saw gains of 583,264% and 106,127%. That's like turning a small stake of $5,000 into $29 million. That's the generational wealth we're talking about. It's also the reason you want to have a good deal flow. Those angels who cashed out on IPO day had an incredible deal flow, the best of the best. As a premium member of the Compound Interest Kingdom, you're already well on your way to creating a foundational deal flow for yourself. But with our angel deal flow, our team takes it up a notch. You see, in addition to all of the deal opportunities our team brings you, we also have a secret weapon, and we have deal flow because of insider connections. One of our firms may have access to handles a big chunk of Google's business. We know people who work with Airbnb, Salesforce.com, and Microsoft. There's a good chance that if the company is a part of the Fortune 500, we work with them, too. When many of the executives from these companies go off and launch their own startups, they call us. Our team gets the first crack at investing in these founders. And members of the Compound Interest Kingdom, you are receiving the deal opportunities that have been fully vetted by us, like the ones we're willing to put our own money into, the deals we want to have skin in the game for. These members receive a first shot at these deals before venture capital firms can even touch them. And we want you to be a part of it. This locked recommendation is just one of many that we let the Compound Interest Kingdom members know about every single month, on top of what they're already used to seeing as members of the Compound Interest Kingdom. For more info, check the link in description. I hope you learned something, guys. Go out there and make some money, like it or not. We are the Compound Interest Kingdom. Goodbye, goodbye, goodbye.
P.S. Guys, I hope you enjoyed that little speech from the future. I forgot to mention, check out our GOLDMINE in the description. There's all sorts of goodies not mentioned in the video, or not even mentioned now. As in free access to the AI video making software featured in this video, and free stocks in GoPro, Dropbox, and Nike at the current price. That's amazing. Check it out, guys. Here's to your freedom.